if you can buy right today, you should pay off massively in 3, 5, 10 years, whatever your hold period is.
Yeah.
And we are super excited for that.
Yeah.
That's what we're telling our investors is now is the time to go in. There's been some pain.
And a lot of uncertainty.
Totally.
Today, we're joined by Chris Garvin, a successful investor in the Seattle market and my good friend. Chris, thanks for joining us today. Thought we'd just jump right in. Would love to talk about some recent transactions you've worked on. But before we do, a little bit of your history. How'd you get into investing? What got you started?
Long story, but two-pronged approach. Right after college, didn't know what I wanted to do. Always thought real estate was interesting. Seeing the stories, everybody's, you think but you really don't. I would call on, back then it was like in the paper. You'd see an apartment building in the paper, or you somehow try and get access to like a web link or something, but you didn't really have the access today.
What year was that?
2006.
2006. Okay.
And I would call on these listings, and I pretend I was a buyer. I was obviously a broke college kid, had no money, living at home with my parents. Yeah. And after a couple calls, couple tours, one of the guys was like, "Hey, you sound somewhat intelligent."
Check.
Yeah, hopefully. And come work for me. So I hopped into brokerage, worked at Gibraltar, and before that Cascade Partners for a minute. And there we sold apartments. The first cold call I ever made, we got the listing and we got paid. And I was like, this is an easy job. This is nothing, right? And that was the last commission I ever made. So crash came 2008, brokerage dries up, nothing going on. I've been working at Gibraltar, like I said, and they were very successful, private equity shop for real estate in town. Kind of saw how they did things, and all my clients were off on the sidelines. There was nothing happening, and we were running out of money. And I was like, what? The next good deal I think I find, we should try and buy it. And I was talking to a college friend of mine who was in construction. We found an off-market deal. It was a 9-unit in Capitol Hill, and we raised $500,000. At the time, that felt like $1 billion.
Yeah.
I was at home with my parents, so after work hours, we were renovating units, things of that effect.
So when you raise, like breaking it down for anyone that doesn't know, raise money, were you asking friends, family? Like, how'd you do that?
2008, it was anybody that would talk to me, to be honest. We had a couple clients invested, friends and family invested.
Cool.
And that was 9-unit Capitol Hill. So that's almost 16 years ago. And we did another deal, another one. And all of a sudden it was a full-time job. Yeah. And the kind of rest is history.
Okay. So digging in on that exact topic, stats, how many transactions have you done? Have you developed? Like, give us a full spectrum of the types of deals you've done in the last 16 years.
We've done 50 deals. We've sold 30.
Okay.
We're predominantly value add guys. We've done one development deal. We have, I think, 18 current projects or current assets, I guess. A few are under renovation. Most of them are stabilized.
Okay.
But yeah, so I'd say about 47 value add and a couple, we have a affordable housing deal in Pioneer Square, but mostly value add projects.
Okay. And then like breaking down simply, what does value add mean to you?
We're looking for a bit of a problem, I would say. We're not looking for, the prettiest building on, we love great locations, but we're looking for something where there's something to do, like, address deferred maintenance. Maybe there's, lower revenue than it's needed. Maybe the OpEx is way too high. Something where you can take it and really tighten up operations, put some CapEx into the building, extend the life of the building, plumbing, electrical, roof, windows, whatever, clean up the units if they need that. And then, typically to do that, you're trying to find a discount of some factor, and probably that's because lots of investors don't want to do that kind of work. It is higher risk. you can get over your skis. And we're used to it though. We've got a GC in house, so we can, bid these projects in a couple of days instead of a couple of weeks. It just gives us a little more of an advantage than most. But yeah, it's kind of a typical deal.
Okay. So speaking of deals, let's talk about one of your favorite deals, whether it's because of the return or it's really unique or something, but one that stands out to you that went really well.
I'd say early last cycle, 2012-ish to 2015, a lot of great deals. I think probably my favorite deal was our first bigger deal. We did like a 50 unit in Capitol Hill. We got that off market. That was 2010. It's called the Whitworth. We, renovated it, from plumbing to units, but really it was just kind of a revenue lift and clean up the OpEx. So that was bought in 2010. We sold in 2016.
Nice.
We did quite well in that deal, but I still kind of miss that deal.
Yeah.
I used to live there. I was the on-site manager at that back then. And so I have a soft spot for it for sure. I still go by it and I'm like, I hung those lights back there in that courtyard.
Yeah.
So
rough metrics without getting into the details, like how much did the equity multiply? Like, can you give a little background on like what the returns look like?
We raised $4 million for that. We 3x'd it.
Wow.
We sold 2016-ish. We got approached off market. Again, we weren't sellers for that deal, but it was an older brick building. It needed some work. It was URM, actually. And back then, URM was always a little more tricky. Yeah. But it was manageable. You could insure around it. Yeah.
Did you so URM being unreinforced masonry. So this is a brick building. It's only a brick structure. And the reason they're tougher to deal with, tougher to insure in a city like Seattle with potential of earthquakes is they're allegedly less stable.
Right.
Yet none of them have fallen down.
Yeah, allegedly. Yeah.
Did you retrofit that or not?
We did not. Okay. So we had plans to down the road, which is a huge undertaking. Yeah. And this is pre a lot of the regulations that were passed in 2018, 2019. Okay. So you could, previous to that, you could, put a plan together. I'm going to, retrofit X amount of units and phase it through the building. And it probably will take a year or two. You were kind of in control of your building. Yeah. The new regs happened in 2018. There's a tenant relocation ordinance, and that basically took off the table your ability to control any kind of occupancy. You can control it, but you kind of can't. So you wouldn't want your building totally empty. Yeah. Right. You'd want 10% or less, and you just phase it through. And we bought a deal in 2018 that was URM. Yeah. This is pre those regs, with the goal of retrofitting it, which we did. Yeah. But that ordinance was passed right after we closed, delayed us a year, and then we had this lumpy occupancy trying to get through the building. And I would probably not do a URM today, just because you can't control so many factors now. Yeah. And that's not a good feeling in this business. Yeah. So.
And that brings us probably to the next question, talking about, maybe a deal that didn't go as well. Yeah. Speak to a little bit about that. Regulatory, or what made it difficult? What made it not work?
I would say we've done 50 deals. We moved into Pioneer Square, International District, 2018, 2019. We love this market. We think it's coming back. It's, it's essentially workforce housing and affordable housing. One was affordable housing, one was workforce. These rents are $1,000. Very underserved market. Yeah. We renovated one building, the one I just talked to you about. Yeah. And it was going great. And we had COVID. Obviously, we know what happened there. Yeah. I would say Pioneer Square, the ID, almost belly of the beast in terms of worst locations to be. Yeah. Maybe in the country, to be honest. Yeah. We sell those assets, but they're suffering. We've got, again, these rents are $1,000. We need these units, right? But they're 20% vacant. Nobody wants to live there. People want safety. Safety over cheap rent. Yeah. That's just the reality. Yeah. And we're not in control of the building. It's kind of weird saying that, but you've got some really bad tenants, like just a couple or one, wrecking the whole living situation for the 90 other tenants. Yeah. And it's scary. You got parties, all not the good kind of parties, you know, all night long. You got drug deals. Yeah. You know, we even hired Seattle Police Vice to go do a sting on one of these guys. Wow. And they couldn't get him out either. Yeah. And so, you know, the only reason that guy got out is we had Vice call SHA and they yanked the voucher. Wow. So, I mean, there's some dysfunction in the city. Yeah. Doesn't mean I'm not a huge believer in it. Yeah. But there are some general laws that need to be unwound. Yeah. And, you know, if you're in affordable housing and in Pioneer Square ID or just like workforce in that area, you're kind of getting run through now. And that's market guys, that's affordable guys, it's nonprofits. You're going to start seeing things break down there. Yeah. And it's not going to be pretty. Yeah. And it's just doesn't need to happen. Yeah. And it's sad because we have a housing shortage, but these markets are 20% vacant. Yeah. So if I'm a city official, I'm like, that is just not a good number. Yeah. Like people should be living here. Also, this is a great part of our city. We should be showing off. Yeah. You know, Pioneer Square is cool. Yeah. It's like a bigger Ballard. Yep. And it's just, you can tell we're not in control of it, and it's spooky. Yeah, I hear you. Speaking of that, let's fast forward now to today and start talking maybe a bit more about a current deal or a recent closing you worked on, specifically hearing about some of the changes, whether it be the pandemic or city regulation, insurance requirements that have made it more difficult. And then we'll also touch on, you know, some of what we think is the really good upside and why those should be purchased today. Sure. So speaking of the deal, do you have one in mind? Well, the last deal we did with you is a good one. Okay. So that one in particular, 50 units, Capitol Hill, heavy value adds. It's got operational upside. It's got a lot of deferred maintenance, but really big units, great views, great location, good parking. What attracted you specifically to that deal? You know, 2023, we chased, you know, hard, just like we wanted these deals, not just like tours and, you know, some lame offers we put in. Like we went hard for probably 3 or 4 deals and we didn't get them. And we thought we'd get 2 maybe. So we had kind of a slow year. Yeah. And the market just wasn't there. Like you had sellers not ready to lower their price. You had buyers needing lower basis to go in. Yeah. It was like paying for gold, you know, and the market is just, you know, you're just going through it and a couple pop through and you got to hit the ground when they pop out. Yeah. And those few we didn't get. Yeah. And somehow I was always like, you know what, this is going to be a major lift for somebody. Yeah. I know that there's a major problem here. And so it's kind of just watching like, hey, this is the pricing's here. Seller thinks it's worth whatever. We believe it's around here, but it's going to take a minute to get there. Yeah. And I think we started chasing that in like October 2022 and took us till April or March 2024 to close. But in the market kept doing one of these, right? Yeah. And so, and the cost kept going up. So, you know, it was just a hard deal. It's probably the hardest deals in my career, to be honest. Was very difficult for us as well. I mean, looking at that listing agreement and thinking, should we terminate it? Yeah. Right. You were the second and the fourth buyer. Right. Yeah. So persistence paid off. So a lot of lift there. What about what was going on in the market at the time? It sounds like you're having trouble just finding any investments. But that one obviously came back available. And now you guys are into it. Speaking of market timing, though, like how does it fit your model? Maybe comparing back to 2010 or 12, where things might be a little bit discounted today. I would say I don't think we're at the bottom right now. I think we're close. No one knows when the bottom's coming. Yeah. And you can't wait for that time because then it's in the rearview mirror and you've missed out. Yeah. Right. So you really have to have just the understanding of what, you know, risk you're willing to take today. Mm-hmm. Can you solve to a return on cost that's acceptable? Yeah. And is the basis, you know, attractive, you know, from, you know, purchase price, CapEx, reserves, holding costs, et cetera. Yep. Are you confident in the lease up? Which I'd say yes on a lot of those.
Yep.
Check the box on a lot of those.
Yep.
There's parts of Capitol Hill that are still recovering from COVID, but we bought that deal, and there were some homeless encampments nearby, and we called the police. We're like, hey, let's clear this out. We gotta secure the alley.
Yeah.
And they showed up the next day and helped us with that.
Yeah.
And that was great.
That's great.
That was amazing.
That's new.
That is new.
Yeah.
We've had back that up 2 years. Similar project. Took us 2 years to have the police show up.
Wow.
Or maybe reframe. 2 years for them to do something about it.
And back to your point about a couple residents in your deal in ID Pioneer Square. I mean, those 2 or 3 residents can affect dozens, if not of units, if not the whole building, right?
The entire
Same
building.
with what's happening on the street around you.
Correct.
So having that cleaned up now allows you guys to execute on your business plan.
And there was 30 vacant units in that building.
Yeah.
Again,
Just sitting there. Some of them were occupiable, just sitting there.
Just sitting there, not being used. There's all 2 bedrooms there.
Yeah.
People are loving 2 bedrooms right now.
Yeah.
And that was pulled out of the housing stock. Now we're putting it back in.
Yeah.
This is good for the residents of Capitol Hill and just safety in the neighborhood. And the goal is to go down the street with other stakeholders and say, hey, we got to put some money into the street. We got to clean it up, re-landscape it, secure your alleys, secure your tuck under parking.
Yeah.
And if the other owners on that street will do that, it will transform the whole situation.
It will.
But that takes collaboration, takes time, and also you need to know that city supports you in those kind of investments.
Yeah, I thought that was smart. We were talking about this is on Summit Avenue. There's a couple of block stretch that's got some good properties, some rough properties. But like you said, if the city is going to back you, then you as an investor want to put your own private dollars into the improvement of the general neighborhood.
Yeah,
right.
Exactly.
Whereas if you didn't see the city helping, it probably wouldn't make a lot of sense to do that general improvement because it's just going to get beat up again and again.
Totally. And you have to believe that Seattle will continue to pull out of this.
Yep.
And I do believe that.
Yep.
You've got job growth, you've got economic drivers. It's an exciting city. There's water, there's mountains. We're constrained here with land.
Yep.
All of those indicators tell me there's good things to come.
Yeah.
But we're in this little situation and we're grinding out of it.
Yeah.
And I'm excited for that.
Cool. So speaking back of the specific deal, just because we're trying to educate people on how this all happens, you obviously underwrite as much of the risk as you possibly can. Since closing, what's one thing that you're like, you think you may have missed, and one thing that's been like a happy accident?
I was really happy the police showed up.
Yeah.
To be honest.
Yeah.
It was like the happiest thing there was.
Because you have no control over that.
Zero control, out of our hands. They showed up. They were great.
Yep.
And I was definitely very pleased with that.
Yep.
Nothing yet has happened that is on the negative.
That's true.
The elevator's working. Got the elevator to work. So that's
go.
great. I'm sure we'll find some spot plumbing in there. It's like, you can't see beyond every wall and there'll be some leaks.
Yeah.
But that's been nothing yet. So I'm actually pretty happy so far.
So you buy it, 30 units are vacant. You're able to start renovating those pretty immediately.
Yes.
And you guys closed not that long ago, like a month and a half.
Yeah.
Where are we at? Do you have any occupied units?
Not yet. We think the first ones will roll online first week of May.
Okay.
We're going to paint the exterior. We're getting a window permit to replace the windows, redo the courtyards. The railings are not safe. There's spalding on upper floors. We got chip the concrete out and kind of solve for that.
Okay.
So there's some steps to making the building livable.
Yep.
And then from there, market the space and lease it up.
Nice.
We think we'll be done with the project from like a CapEx perspective summer-ish, so pretty quick. That's our goal at least. And take a year to lease up.
Okay.
Hopefully sooner. We'll see.
So done in June, July maybe, and then fully stabilized a year from then.
At Q1, Q2, 2025, somewhere in that range.
So let's talk about some of what we call like the uncontrollables that occurred during the deal and you're working on now, specifically financing and insurance.
Yes.
Let's jump on financing first. How has that been? You're buying this property. It's pretty beat up. So you got a nice low basis, but you're going to bring in a ton of cash or ideally lending to do the improvements.
Right.
how is getting that loan, compared to a couple of years ago?
Very difficult. Would be the simple answer, but really you need really key partners, I'd say, on these projects now. It's like you're not just blasting your deal out to the market. You're just taking any quote that comes in. You want to make sure that lender will perform and also understands what they're getting into.
Yeah.
That deal in particular, extremely heavy lift, like $100K a door lift.
Wow.
Right? We're putting, I think, almost $5 million into the deal.
Yeah.
And we had one lender come in who had done business before, great lender. We thought they were going to do it. They pulled out I wouldn't say 11th hour, but pretty late. 10th. I had to call you, hat in hand, be like, I need some more time, and another one stepped up and they got through it, and they were very hands-on, local lender, and we closed. Yeah. It was a great outcome with some really scary circumstances in escrow. Yeah. And then the insurance was probably another tough issue. Yeah.
So lending, just to clarify, when we say blast it out, it's like, hey, let's just go out to 30 lenders and see who gives us the best terms and go dunk the deal.
Totally.
Whereas now you got this market with moving interest rates, banks are pulling out even when they've already made a commitment. You want to pick a good partner.
Right.
Subject to, you want good terms, but terms isn't the only thing. Right. You want someone that can get you closed.
Absolutely.
Okay, so that's different. And then if we transition to insurance, I mean, that's what I've heard about more from clients in the last 12 months than interest rates, is existing buildings they have that used to be $500 per unit to insure are now, they're getting dropped, and they go back out to the market. It's $1,200 or $1,500. Totally. So how are you guys navigating that market?
We are experiencing the same exact issues. We have a lot of older vintage buildings. Yeah. At Seattle, you got some newer stuff, but there's a ton of old product here. Yeah. And that's most of our portfolio. Yeah. So we saw increases. We underwrote our budget 30, 50% increases. We had one building do an 8x increase, which, unheard of. We had a good deal before.
So it's like 100,000 to insure. Now it's 800,000 to insure.
Well, it went from 8 to 60 or 8 to 50. I forget the number was, but
that's insane.
It's insane. I mean,
Can you even cash flow?
You could barely.
Yeah. Cause that's a lot of your margin right there.
Totally. Yeah. And that was shocking. And I think that was an outlier situation. Yeah. But you'll see more of those coming, hopefully not on our portfolio. Yeah. But, and hopefully next year we can kind of bring that back down to, earth here. Yeah. But, I think older product, you're 1,000 to 2,000 range per unit, and it was 300 to 500. Yeah. And, that's just not reality anymore. Yeah.
Interesting. So, I mean, what I'm hearing that's really neat for what I'd say a building that probably is close to being condemned, right? For $100,000 per unit, you're able to bring these 50 units online within 3 or 4 months. Yeah. I mean, that's amazing. That's the type of story I think the city should want to be a part of. Right. For educating the audience to build brand new with the cost of land and building and everything else, it's going to be somewhere $400,000 to $500,000 per unit. Totally. So you can salvage these units for 20% of the cost. Absolutely. And in probably less than 20% of the time. Yep. What could the city do to help you and other investors like you bring more housing online faster? Where are your pain points with them?
I would say, it used to be, and I'm sure developers have their own opinion of this. Yeah. It's not really our space. We're buying existing buildings, doing the things we talked about. Yep. A lot of these buildings have daylight basements, storage units. It's not sexy, but you can bring on 5 to 10 units. Each building's different. Yeah. And in a couple of months, I'd say 6 months to permit. Yeah. 6 months to build out. So a year, right? And these aren't units we're charging $3,000-4,000 for. You're getting $1,200 to $1,600. Gotcha. They're kind of in the basement, right? Yeah. But you know what? You're up and coming. You're out of college. You're not making. You can't afford higher end units. Yep. These are great places to live before you transition to that part of your life. Yeah. And
it's unused space that already exists.
Exactly.
Good neighborhoods.
And it used to cost, $50 to $100,000, and the permit was pretty simple. Yeah. Now we just did one. We had 6 units.
Sorry, 50 to 100 grand per unit to add it?
Yes.
Okay.
Yes. And we just did one in Lower Queen Anne. We had 6 units in the basement, and we underwrote it. I think it was going to be about 150-ish, we thought. And we're at $300K a door.
So to add each unit is $300,000.
Yeah.
Does that even pencil at this point?
We're going to lose money on that.
Yeah.
And part of that is, you can underwrite, framing, electrical, plumbing, etc., but you don't know what the city will make you do once you get into the permit process.
Yeah.
We had to build a retaining wall. We had to build a new bike storage area that
didn't exist before.
It didn't exist. No one uses it.
Yeah.
Like the trash enclosure had to be changed. We had to do all these things that we didn't know we do this every day, and we just you can't predict what they're going to say in that process. Yeah. So we're like, done.
Yeah.
We wouldn't add, unless it was just, I don't think I'd even add a unit in a basement anymore just because of that situation. You don't know what you're getting into. Or it's like, hey, we want you to upgrade the fire panels and all this other, items or fire sprinkler in the building. That's $500,000 right there, at least. So
if you don't do anything, they don't bother you, but you go to improve the unit or the building, add more housing, arguably affordable, and now it costs so much because they're basically tacking on all this other stuff.
Exactly.
Yeah. So why is not incentivizing you to build any housing?
No, it's a disincentive.
So then I guess with that said, you guys doing what I'll call heavy value add if you're adding units to basements, how has that adjusted your strategy investing in Seattle? Like, are you just going to target more luxury units because it's just easier to go that direction? Or
I would say we're not doing unit additions for now.
Okay.
I wouldn't.
So not adding housing.
Nope. I mean, it used to be you could tuck under parking and do all these cool things, and maybe add a unit, or in the basement add some units. Yeah. It's just too hard.
Yeah.
It's too unpredictable, like we talked about. Going up market is the safer investment in Seattle today. Urban affordable housing, like for all the things I talked about, is just so risky. Mm-hmm. You aren't in control of your building. Yeah. Some really bad tenants are in control. Yeah. Your good tenants leave. Yeah. And you can't fill it back up. Yeah. And what do? You have to kind of say, this part of town, I need to kind of avoid. And until those, eviction laws change, where you can get out those bad people, I don't see that being possible to invest in those areas, frankly.
Interesting. Where, with what you know now, where's the best investment for you to pursue?
I would say love the neighborhoods around Seattle: Ballard, Capitol Hill, Queen Anne, North Seattle. Really just the core neighborhoods: First Hill, Pioneer Square, ID, Belltown. It's really tough. Yeah. Just really hard. Yeah. You don't need to be an expert in housing just to walk around and be like, I'm not sure I want to live here.
Yeah.
To be honest.
Yeah.
And
there's always this gut feel, right?
Yeah.
You see a property, you see the picture, you see the financials, you see the flyer, and then you go out there and it's just like, you're like, get excited or you don't. And the ones you just named, I've been to plenty of those properties where you're like, ugh, it's gonna be a tough sell.
It's so hard. I mean, I empathize for those owners because I am one as well. Yeah. And it's just like, there's nothing we can do until these laws change.
Yeah. So speaking of laws, one of the biggest concerns I've heard, and it's been threatened and argued and debated, is rent control.
Sure.
How would rent control passing in the Seattle market change your outlook?
I'd say, first of all, it's unpredictable. You don't know what type of rent control would be showing up at your door. Yep. Some of it is kind of manageable. Yep. Some of it's completely not. So I don't know what that would be. But either way.
Manageable being like, maybe there's a cap on the amount you can charge. Unmanageable, what's an example of that?
I think just the unpredictability of legislation.
Yeah.
That we don't know anything that's coming down the pipeline. Yep. You kind of have to back up and say, like, let's just see where the chips fall a little bit here.
So maybe it's a pause on Seattle for a couple of years, maybe, as things shake out.
Or you are hesitant to invest in your property because there's, you lose money on it. Yeah. Like we just talked about. Yeah. No one wants to do that. Yeah. And so it kind of creates this like doom loop of properties degrading. Yeah. A couple of tenants, like I said, kind of taking over your building. Yep. affecting the good residents that you want there.
Yeah.
And it's just not great.
Yeah. So like what I'm hearing, and I've talked to clients about this, the would-be owners that you may buy from, right? Their family developed this property 60 years ago. They've kept it in good shape. They operate it relatively affordably. And if rent control were to pass, you're coming in, improving the building, curing deferred maintenance, maybe adding some units, and you'd stop that because, right, you can't maybe improve the building. You can't make the rents work. So there's no reason to invest in it.
Exactly.
So now this owner wants out. You're still a buyer, but what happened, right? Pricing probably went down pretty far.
Yeah.
And then, I what I've seen is owners can handle price adjustments, but it takes time.
Right.
So when COVID hit, it took like 6 months to reset. When the interest rates doubled in 2022, it took about 12 months to reset. I would guess rent control probably chills things out for like 2 to 3 years.
Definitely.
So yeah, it's a big challenge. You guys have bought outside of Seattle before, I think.
Everett, Kennewick. We're looking at Mountain West right now.
Anything in Tacoma?
No South End deals right now.
Okay, so you got a couple outside of Seattle. Is your preference to keep going further from Seattle, or would you rather be here?
I'm bullish on Seattle. Like I love Seattle. This is my home. There's so many great things here. There are great things about those markets too.
Yeah,
they are way easier to operate in.
Yeah,
you can just be normal there, and you can't do that here. Really anymore. But all things I said, Seattle is so dynamic and so exciting for the Northwest.
Yeah,
it brings people here. I mean, I was here in 2008. The town, it's the sleepier town than New York. We're not New York City, but it is dramatically more diverse. There's more culture here. There's so much more exciting things. That's from people moving here and changing it up a little bit. It's not from the status quo, kind of keeping it how it was. And I think Seattle will continue to do that, but we can't chase business out of here. We need safe streets. Like this is like common sense stuff. And I understand some of these laws are intended to protect people, but really they're hurting them. Gotcha. They're really hurting them. And it's disappointing.
Yeah. Last few questions, maybe to help a new investor. What's something people overlook on their first deal or two that you'd say, hey, pay close attention to this?
We really focus on plumbing these days more than anything. I'd say
it's kind of a boring answer.
It's a boring answer. It really is. And but 10 years ago I wouldn't have said that because it just is slow kill. It's a slow death. And
you just chase
it all around. Your tenants get ticked off because you're in their units, you're opening walls, it's leaking. Other CapEx issues, leaky roofs, electrical, it's just so much more manageable. Plumbing is the wild card that it's going to be okay or it's not going to be okay. And, that's definitely a boring answer, but
the right answer.
That's what it and I'd say extremely important.
Gotcha. And then reflecting back, you've been doing this 16 years. What's something you wish you knew when you started? Like, go give young Chris some advice.
I sometimes think young Chris should give advice to old Chris because when we're I came from the broker background. I was like values. You're trying to pay a discount to market or something like that. We're trying to outperform the market, and I think the older you get, the more like analytical you become, and it kind of takes away the direction of what you're doing a little bit. And we were really good at like spotting a deal, finding a discount. We're gonna go do it. And I think now it's like we do the same thing. But we kind of like almost try and perfect it a little too much sometimes. Where it's just like, this is great real estate. This is on Main and Main. Return on cost is good. You can't predict year three's rent growth. But this basis is great. Buy the sucker. That's what really
we call it analysis paralysis, right?
Exactly. And we don't. I think we have a lot of conviction in deals we do. We go in real hard. But there are times where I'm like, young Chris would have bought that deal. No, that's really good advice. But I'd say, there are certain things I know now that are different than back in 2010.
Yeah.
You know, like 2010 and up, you know, we rode a good market, and those, if you make a mistake, it's kind of covered up a little bit.
Yeah.
Where now your mistakes are quite clear.
Yeah.
And so, you know, I think the biggest mistakes we made was, you know, I'd say around some COVID times where you're trying to kind of do the right thing, but it ends up, it's so unclear on what the rules are or what the paths are with the city that we just should have just done what we should have done.
Maybe ask for forgiveness.
Exactly.
Yeah.
Instead of this, like, you know, apply for the permit and wait around for some city guy to call you back who never did, who was on vacation for 6 weeks or who knows where he went.
Yeah.
And so, you know, and it was a weird time.
Yeah,
it was so weird. We were so sensitive to residents and just society in general.
Yeah.
I think people were kind of just sitting on their hands, trying not to get, you know, whacked too hard.
Yep.
And I'd say we should have been a little more assertive back then.
Okay.
So
last question for you. It doesn't have to be directed at me, but like, what can a broker do in the sale process other than like find you the best deal and don't tell anyone else about it?
Yeah.
What can a broker do to like improve, make it easier for you?
I would say today, putting the listing in the like an actual buyable price. Like, you know, buyer wants a low price, seller wants a high price.
Yep.
We all get that. But putting it in the chop where like people are interested, right? It might be less than the seller wants.
Yeah.
I guarantee you it's more than the buyer wants.
Yeah.
But something where you're getting some chop in the water.
Yeah.
And you want that. You want tours. You want people showing up. You want a little price action.
Yeah.
And also, like, it forces the buyer to get, you know, sharpen your pencil, get your subs in there, get the bids right.
Because you guys are excited.
As
opposed to like, here's another overpriced
totally
listing.
Exactly.
We'll wait for buyer 4.
Exactly. Right.
Buyer
and by the way, usually it's getting worse right now.
Yeah.
And not getting better yet. And so, you know, if you're a seller, you overprice your listing, you're probably getting less price in a couple months than you are today.
Yeah.
If you actually do want to sell.
Yeah.
And so I would say, you know, it's setting expectations.
Yeah.
Frankly.
And I'd say flip side, being the broker, I mean, sometimes I come in and tell the owner it's worth 12 million and they say, I want 15. I'm like, we can take a run at that. But like you said, it'll chill the market. I think most importantly, piggyback on what you said to share with would-be potential sellers.
Yeah.
If you get, especially multiple offers today, that is the market.
Right.
It's true. It might not be kind, but it's true. And if you're truly planning to sell in the next 6 months, take the best one and just get it done.
Totally.
I haven't seen them get better.
Right.
And I always say, if you've got 5 years, just wait.
Yeah.
But if you don't,
right,
let's just get it done.
Exactly.
Chris, before we wrap it up, just wanted to ask you, you know, heard about some wins, some losses. What gets you excited about Seattle, and what's your thesis moving forward?
I would say right now, I haven't been this excited to buy in Seattle in years. I think the opportunities that are coming are, again, we haven't seen these opportunities since 2008, 2009, 2010. You know, high interest rates are pushing down prices, right? Or investors are maybe over leveraged, or, you know, cash flows have shrunk, or they're tired of just managing properties, frankly. And you can't build these new buildings it doesn't make sense to build. These costs are so high.
Yeah.
Rents are down. Regulations are up. Everything's up except rents, actually, right? And so, or they're probably down. And I'm not saying we want super high rents, but that you want a balance of those things. And it's totally out of balance, right?
You need higher rents in order to pay these, you know, all these different fees and costs.
Exactly.
Fees and costs are up, rents are down.
Totally. And so right now we buy existing buildings. You know, if you're an incumbent, like you own a building, right? We're in this, you're under pressure, right? The rents are down, costs are up, like we talked about, but it's kind of the pressure is mounting on revenue. At some point, it's going to pop.
Yeah.
When that happens is anybody's guess. But if you're a buyer right now, you can buy discounted bases. You know, that's just what it is. It's going to drive prices down.
Yep.
We're in this kind of flat to down rent growth period.
Yep.
But the future should be up and to the right. If things stay the same, which they most likely will, costs will be higher. Inflation's here. I don't know if it's going to get under control or not, but to build a building in Seattle is an absolute fortune.
Yep.
Plus the whole permit process is exhausting.
Yep.
And if you can buy right today, you should pay off massively in 3, 5, 10 years, whatever your hold period is.
Yeah.
And we are super excited for that.
Yeah.
That's what we're telling our investors is now is the time to go in. There's been some pain.
And a lot of uncertainty.
Totally.
Yeah. And so it's really uncertain. And you're saying last time it was really uncertain. That's when we had the best results.
Exactly.
Yeah. That's great.
Yep.
Thanks for joining us. We'd love to hear from you specifically. How could Seattle help you as an apartment investor and owner? If you want to learn more about our listings, please check out our website. You can always get in touch with me with any questions or to discuss the current market. And remember to subscribe.